Good afternoon, everyone, and welcome. Thank you for joining us for this fireside chat event. Let me start off with a little bit of introductions. My name is Prakash Anthony, and I head up the Treasury and Risk Management practice at ITC Infotech. ITC Infotech is a leading IT service provider, enabling our clients to be future ready. We also have with us today Pedro Porfirio, Global Head of Treasury at Finastra. Together, we are going to be talking about probably one of the most important topics of our times, green economy. So, as most of you would be aware, UK and in fact the rest of the Europe are accelerating the transition to green energy sources. And of course, it has to be done, and it is the need of the hour. But obviously, this acceleration comes with its opportunities and also its risks. So we are going to talk about both the opportunities and risks, and specifically focus on inflation or the greenflation, and then also consider how a modern digital treasury is important to tackle the challenges that lie ahead. So let's start. As I was just setting the context just now, climate change is one of the mega trends of this century. Transition to a net zero carbon economy and the use of renewable energy sources is affecting everybody, and all businesses need to do something about it. In fact, leading economists, in fact, believe that we are fast tracking to the next cycle of economic change, which is essentially a result of activities to address climate change, resource depletion, and pollution. Okay, so I'm going to welcome Pedro now and ask, in his opinion, Pedro, what do you think are some of the driving factors of the green economy?
I think when you take a look at being green, there are two camps. You have the people that deny that climate change, and the people that think that's all about CO2. I'm not going to go into that. I'm just going to make a point that being sustainable is a good thing when you see the amount of people you have on the planet and the projections are going to be. And I believe in the 16th, 17th centuries when Malthus said that, there are going to be too many people and you're not going to be able to feed all them. And then we came advancements in agriculture and other things that made, the planet viable to accommodate the human race. I think we're getting close to another one because we're really straining the resources, and being sustainable cannot be a bad thing at this point. You believe in climate change or not. That aside, we're seeing a lot of pressure from central banks and governments into becoming more sustainable, and that has a cost, and probably is going to have a lot of benefits. It's a little bit like the investment people had to make in the US to put the railways from coast to coast. We're probably going to have some massive investments on becoming green, right? Becoming sustainable. And the question that keeps coming to my mind is how you're going to finance that. How you're going to make, because you have all these small businesses, all the houses, all the small businesses, they all need to become sustainable, and the financing should probably come from the financial sector and should probably come from banks. And then you as a bank, you're sitting there and thinking, how am I going to finance that? And more importantly, how can I figure out if the money I'm lending or the loans I have on the books today are green, are sustainable? So that's I think it's a big trend. I think the numbers are just astronomical in terms of investment needed. I think the gains in productivity are going to be large. We just don't know how to measure them yet on this transition. And I think it's something that, if you're not worried about it, you should. I don't know if you agree with me. I mean, you guys touch so many institutions, right? Finastra is one of the biggest fintechs on the planet, and I like to joke that if you had a checking account at a point. If you use the bank at a point in your life, you probably touch a piece of software that is ours. But ITC Infotech touches a lot of other areas, not only financial markets, right? What are you seeing? I mean, do you agree with my statements, or do you see it a bit differently, or?
No, 100% I agree with you. You're absolutely right. ITC Infotech obviously is part of ITC. We are into every industry sector you can think of. So I completely agree. Firstly, I think there is now a scientific consensus. Whether people believe it or not believe in it, there is a consensus that these are the perils of climate change. Secondly, the global policy and the regulations, they're coming together. They are unifying. And thirdly, and lastly, as you said, the investor focus is shifting and it's intensifying. There are public concerns and there are cost mitigations that people are thinking about. So if I have to kind of sum up what you and I are saying, what you have seen and what I'm seeing, sustainable investment, I don't think is anymore a niche activity. Okay, it's a key consideration for any institutional investor that you take, climate risk is becoming a big part of their investment agenda.
Yeah.
Sorry, carry on.
No, we see that, right? You see all these funds now. We need to have a part of it. We have a lot of fintechs, some on our store in FusionFabric.cloud that evaluate how green are your investments, how green are the bonds you have, and all that. But one of the things that is really, really concerning, if you take a look at a bank, you might issue bonds. You might issue bonds on behalf of your clients if you're a large bank and you have a primary issuance, but you have loans and deposits on your books, right? And you lend to SMEs. So the first thing is, when you take money in, and we are in a period of excess liquidity, but rates are tightening up. The question is, do you want to take that extra $100 if they don't come from someone that has a sustainable business? I think we're a little bit far away from that.
Yeah.
But what I think is worrying banks is, if I lend you money to do something, is that how green are you?
Yeah.
And the question people think is not too much a question of, a moral question, is more like a drag on economic sector question. So you're a bank and you lend to a lot of people, and when you lend it with a specific interest rate because of the probability default of that particular type of client. Now, if you're lending to that, and suddenly that sector that the client is on, the SME or the business is on, is going to have a very high drag, a high economic drag, because they're very brown, either because they're going to have government sanctions or government fines, or they're going to have to make a massive investment. Then actually the probability default of the loan is higher, and that is not in any of the models that banks use traditional to measure the risk of the books, or
True.
to have their capital allocation, the stressed probability of default. So I think that's a big problem. The question is, how do you automate that? For you to get a number, you need to automate it. And that goes back to what you said at the beginning, the link to the digital treasury.
Yeah.
Can you actually use technology to make that easier? And that's the thing I keep asking myself. And I think the only way is to digitize your business. But I don't know if you guys at ITC have heard something different, or what are the views about the subject?
No, we haven't heard anything different. But coupled with what you just said, if I look at the size of the green economy, right? If I look at some of the numbers, it's believed that green economy business now is equivalent to $4 trillion, right? And it's believed that $30 trillion in assets under management globally are linked in some way, shape, or form to the sustainable investments, right? So if you look at 2021 last year, the bond issuance that you're talking about, the sustainable bond issuance, doubled compared to the previous year, and that momentum, that growth is continuing well into this year. So, I mean, if you look at the kind of the massive expansion of the opportunities and size of the market, couple that with all the regulations where you need to come up with your sustainability report, right? Not too far in the future. It's time for everyone within the organizations to start thinking about what tools, what mechanisms, what changes in the processes we need to make already to get to that place, right? Where we need to be compatible, compliant with these regulations and reporting, as well as capitalizing on the opportunity that the market provides. Yeah.
Yeah, and when you take a look at the other lines of business, because sorry, I interrupted you when you were answering that. Do you see how do you see when you talk to your your peers in ITC on sustainability issues? Do you have the specific industries engaged? Do you have different geographies more engaged than others? The reason I'm asking is that I just went to the US and did an event with treasurers from the National Treasury Association, and it was surprising to me that they're very worried about inflation and rates moving higher, because in a generation that has not happened, so with its impact, but not a lot of concern on sustainability. I don't know if you see that in other if you see the interest on other industries across the globe being more homogeneous or not.
I think I kind of agree with your assessment that some industries are more aware of what's going on and or at least thinking about doing something than others. I think in my experience it comes down to how big the organization is and what kind of sectors that they are involved in. I mean, if you talk about the environmental, social governance, the ESG aspect, I think every business across any industry they have to make it part of their strategy, right? So, and every part of the organization must play the role in the strategy. I think you mentioned earlier, it's not just about the organization itself being compliant and being green, if you like. It's about thinking about their customers. It's about thinking about their supply chain, right? And the technology they are using. Everything will be scrutinized. It's only a matter of time. If you look at all the regulations and the policies that are being established, everybody will have to think about ESG and complying to that.
And in terms of the clients that me and you both serve, banks, I mean, when you say digital treasury and you say the challenges that they have in terms of the green transition, what do you think are the biggest things that they need to worry about?
Sure thing. I mean, if you let's talk about treasury function or treasurer in particular, right? And the green or the ESG agenda. If you look at treasury in any organization, right, and it plays an absolutely important role in choosing key suppliers, in establishing business relationship with partners, internally measuring the risks associated with their clients and counterparties, right? So if, as I was saying earlier, if you are working with a supplier who's got a poor ESG rating or performance, it can harm your company's own ESG ambitions, and of course that would put there is a risk of reputational damage. So treasurers need to engage with the organization's agenda for ESG and work out how they can contribute, right? And they need to focus on the ESG impact and across the supply chain. It's a cascading chain, of course, but they need to focus on all that. ESG regulations, I can't stress enough, it's starting to shape the global markets. Sustainability reporting is no longer just a discussion. I see a lot of organizations are moving from discussion to implementation. So now every treasury function out there needs to start thinking about being green and how they can meet the sustainability reporting obligations and how they can track that And as you were saying earlier, it all leads to what tools and what technologies we can make use to be able to do that.
But we're seeing it's interesting because the European central banks have now a agenda on how to do an agenda on stress testing. So they're asking the banks to stress test their books for how green, for shocks, for issues, and I find it. So we did a webinar with Professor Pedro Porfirio from the IU University about a month, 6 weeks ago, and it's very interesting because he separates the risks in two risks. One is a transition risk, meaning the cost that you're going to incur to become green. But the other one is physical risks. It's catastrophic event risk. And I find it interesting that people focus very much on the catastrophic risk from floods and all that, and it shows the impact on the perceived risk on real estate prices today. It is a very interesting study. But I don't see many people talking about the fact that, if you have a boiler, you're going to need to install a heat pump. If you have an oven if you own a pizzeria and you have an oven that's not efficient, you might need to invest on a new one that is efficient. That, if you're in central London and you have a business and you have a car that's more than 10 years old, it's going to be expensive for you to go up and down. They're going to charge you 30, 40 pounds and maybe more as time goes. And I don't see many people talking about that. And while I see banks doing the risk on the physical catastrophic risk, if I have a portfolio on a particular geography and I might have a flood and I might have a problem with loans, residential loans or business loans in that region, I don't see them getting their probability default curve and saying, okay, my probability default curve on this type of scenario is 1%. But if on this group of clients, maybe 10% of my portfolio is involved on a particular activity or is in a region with a very strong economic activity that's going to have a very strong drag, let's say 5% drag. So if I think that the economy is growing at 2%, that particular business is going to be it's going to be growing it's going to be contracting at 3%. How does that impact my probability default? And how does that impact my stress default, so I can calculate the capital difference between what I have today and what I'm going to have in the future, even from reporting purposes? I don't know if people are doing that. I don't see banks doing that, and I don't see how you as a bank, you can do that if you don't have your loans digitized, if you don't have your treasury digitized, and you start now to make some at least high-level assessments on how to classify those things. I still see a lot of the stuff that's being done based on very old school asset liability management techniques. I just don't hear it. It might be happening. And I was wondering if you have seen anything, if you have seen, apart from the standard traditional approach, you've seen people doing things a little bit different.
It's a mixed bag, Pedro. You're right. Some organizations are slightly ahead in this curve. And so some aren't. Now, they probably don't even understand what's coming their way, right? So, you don't need to look too hard. Take any organization generally. It doesn't have to be a financial institution, right? You can see the production costs are going up, right? The operating costs are going up. And there are lots of, instruments being written off, right? So, and there is a consumer demand shifting from what they used to get earlier, whether it's a product or a service, to something that's a lot more greener. And you can see some companies, at least, they are investing in their R&D to come up with new and alternative technologies. And of course, although the organization, not all the organizations themselves are thinking about going green or sustainability, the government's already is spending directly, and it's driving up demand for a lot of materials that even the other organizations, corporates, would need, right? And the government's direction is towards a cleaner economy, but obviously, they are investing directly. They are tightening the regulation. What that means is some of these, take for example the cost of aluminum, lithium, right, and copper. They have skyrocketed, and it's no surprise. Those things are absolutely essential, whether you talk about solar or wind power or even electric cars for that matter, right? So it's only a matter of time before everybody will start to see that. So what we are seeing in terms of the inflation or the greenflation is a symptom of what's sitting underneath, which is a big problem. And the organizations who have already woken up and doing something about it, digitizing their application stack, getting it ready to be able to track, provide transparency across their value chain. So they are going to be much better placed when the time comes. I don't know if you agree with that.
No, it's a very good point, because as you say about the inflationary impacts and how they're going to impact your clients, right? I think we've been for too long with a very low inflation. And I think we'll start to get some very high inflation and some of the prices really, really going crazy. You're going to see specific stresses in the supply chain and on the businesses that you service as a bank. So the assessment that you do now on your client base for sustainability and that type of segmentation, you can make the point that you need to do that not only for that, but as well for the impact of inflation. Example, I have a portfolio of 100,000 loans, right? 10,000 of those loans are related to a particular region on your country that has 3 aluminum recycling plants, right? As aluminum prices go up, right, these places are going to be making some money, so I can make the point that the probability of your loans will go down. But aluminum, I believe recycling is extremely energy, consumes a lot of energy, right? It's a high usage of electricity. And depending on the source of electricity, you might have that impact. I'm not saying here that you need to go into an absolute crazy level of detail of each business does. But I think that banks now have with cloud, with digital recognition, all these things, I think banks now have the ability to be able to get much more granularity on what they use to assess the state of their loan book. It's much easier to do than it was in the past, but you need to invest in technology for that. The question here is, how much do you need to invest in technology, and what level of granularity you need to go to actually make a difference, right? Because maybe if you go 5 layers down, the gains in productivity are very small compared to going 2 layers down. But at the same point, as a bank, you need to invest in technology anyway to become more efficient, because that's what you do, right? To automate your processes. Yeah. So I think things are linked. I think it's very interesting times, Prakash, that are going to come. I think it's going to be, and I find it hard to believe that the banks that wait are going to be the ones that are going to win.
No, I couldn't agree more with you. So, I mean, if you speak to any CIO or CTO, right, so they talk about 3 things: growth, digitization, and efficiency, right? And across that, you always hear about, how do I drive my TCO down, which is probably one of the drivers behind digitization, and how do you improve customer experience. So if you look at most organizations, you are talking about RPA, robotic process automation. How do I get rid of labor-intensive, repetitive tasks, that I don't have to do every day. And of course, every organization is looking at AI and big data analytics, right? So whether it is something to do with cash flow planning or being compliant with regulation, commodity credit risk, for example, or hedging, you have AI and big data coming in big times, with all these predefined models. And at the basic stages, organizations are already looking at cloud-based treasury management system, for example. And when they're looking at, they're asking about how open is your application stack, right? Talk about open banking, APIs. So the whole ecosystem that they want to build, it needs to be flexible and scalable. Now, this is where, Finastra, in my view, that they've got way ahead already, in establishing the Fusion Fabric data cloud that you were talking about and opening up the whole ecosystem, right? So when you are talking about a new digital treasury, you don't have to just think about, unplugging just one piece and replacing it with something a bit more shinier. You can holistically look at the ecosystem and do what's right for future.
I think it's a good way to think about it. Well, of course, that's our strategy, so I'm a little bit biased, but you being able to have your treasury on the cloud and have the being able to expose the data to different fintechs to consume different services instead of having that long projects deployed on site and have that run. I think it's a massive difference. And I see people getting more and more comfortable having the data on the cloud and understanding that stuff on the cloud is much safer. I get the jurisdiction issue, and I think that's important, meaning if I am a bank that has a particular regulator, I can see the regulator not wanting the core data to be outside the control of the bank, but I see people much more comfortable having the data on the cloud being shared with specific people, because you have a lot of control over the security of that. I don't know if you agree with that statement. I don't see if you're seeing a acceleration on cloud adoption, if you're seeing it stabilizing, or if you see it, you don't see a lot of progress. What's your view on that?
I see absolutely change. There's a big mindset change in terms of people being a lot more open to cloud. The very people who maybe before the pandemic kicked in, who were worried about security, how do I make sure my data is secure and is not leaving the jurisdictional boundaries? I think the things have moved on. Majority of the clients that we speak to, Pedro, today, the very first thing they ask about any solution we propose to them, is it cloud native? Is it cloud enabled? Is it on cloud? But of course, you come across some organizations, who made a massive investment, within, their big data centers and whatnot. So it's not going to be pragmatic for them to, at this stage, just to, lift and shift everything to cloud. But majority of the client, especially the medium to small tier firms, they get the benefits that the cloud brings, right? And again, going back to what we're talking about here, the green economy and the ESG and the Greenflation, we've talked about the need. You talked about, maybe they will have to. Every organization will have to go down 3, 4, 5 levels, right? And you can't achieve that kind of transparency and detailed level of tracking and reporting if you can't, for example, take real-time data from multiple devices across geographies, right? And that means the amount of data you're going to bring and process is going to be massive, right? So even things like what's my liquidity gap in a year, 2 years time from now, is not going to be as simple as what it is today, right? It needs to crunch a lot more numbers. There's a lot more analytics that will kick into it, and which is why it's absolutely important that every organization start to look at digitizing their treasury app stack.
Yeah, I mean, we can talk about this the whole day, right? And exchange.
No, absolutely. I think we've got 2 minutes left, so maybe I can just sum this up. So first and foremost, Pedro, thank you very much for your time. I know how busy you are, so thank you for your insights and your time. I have to sum this up. Truth, they say, will set you free. So the truth is that the green economy is for real, and the opportunities it provides are substantial. But equally, the challenges and the risks it brings are real too, right? So the cost of going to net zero, including higher prices, are inevitable at least during the transition period. So Treasury Department in particular play a vital role in sustainability agenda of any organization. As we discussed, a modern digital treasury is a prerequisite for any organization to be able to cope with the transition and meet their green strategies. So with that, I would say thank you to everyone, and we hope you found this session useful. And if you do have any questions or want to discuss your target state treasury, contact Pedro or myself, and we'll be more than happy to talk to you and work with you. So thank you again for your time, and I wish you a good day.
Thank you, Prakash, and thank you very much to everyone. Thank you very much, ITC, for the opportunity.
Thank you, Pedro. Thank you again. Take care.
Thank
Bye-bye.
you.